Have you ever noticed that crypto is its own ecosystem where Bitcoin leads the pack most of the time and then everything else kind of follows and trails behind? Sometimes you get outliers that greatly outperform what Bitcoin does, but for the most part, Bitcoin determines the health or the well-being of the cryptocurrency market. Now, why is that? If you've watched my videos, you've seen me talk about dominance levels, but I actually want to simmer that idea down to something super duper dead simple called the multiple factor effect. And this can be seen throughout crypto. And this is something that's incredibly vital to you understanding how to trade alts, when to trade alts, and how to benefit when Bitcoin is pumping, and how to protect yourself when Bitcoin is showing signs of dumping. But before I get to that, if you're new, make sure that you sign up. You subscribe. It's the other S word, not that S word. Stop. Subscribe to the channel. There's lots of good stuff happening. I like to have fun in my videos, and I hope you guys like to have fun too. I hope you all have had a Merry Christmas for those who celebrate. And also, I believe this year was the first, what is it? In the last 100 years, it's like 5 times that Christmas and Hanukkah have fallen on the same day. So mazel tov, that's pretty amazing. So I want to talk to you now more focusedly about what's happening with crypto and why it seems that alts just absolutely puke when Bitcoin has the smallest little sneeze. You've probably seen those memes of like the drunk guys on the hill. Bitcoin falls down, like the guy tumbles a little bit, like 3-5%, and you see altcoins just roll and roll and roll down the hill. Why is that? Well, there are 2 main reasons for something what I call the multiple factor effect. You can't see that part, but I have to bring this over here. So the multiple factor effect has 2 parts to it. 1, leveraged long liquidations. That's one reason. And 2 is going to be stop loss triggers. These are the 2 main reasons why the multiple factor effect works so well in crypto. Now, like I said before, like it or not, as much as you may not have exposure to Bitcoin, it's always a good idea to have a little bit of Bitcoin in your portfolio. In the courses we have at the Better Traders and even on my personal YouTube channel, the link is in the description, I tell people to have at least 30% of your portfolio in Bitcoin, just there. Why? That seems like a lot, right? Especially if you're trying to make a ton of money. Well, the reality is that Bitcoin is acting like a buoy in your portfolio, much like stable coins in your portfolio act as a buoy. So that when the price of everything is tanking, you have stable coins to help buoy or protect your portfolio from all of this crazy massive drawdown that happens when alts just absolutely, the bed. But the problem is that when Bitcoin is pumping and alts are as well, if you're 30% allocated or so in stable coins, you're going to feel that pain. You're going to feel that FOMO because everything's going to be pumping. But when there's a pullback, when there's a massive pullback for alts, you're going to be so glad that you have those stable coins because with them, you can buy the dip. Now, let's bring it over to Bitcoin to talk about this multiple factor effect. And honestly, it's as simple as adding one simple chart on top of this. Can you guess what it's going to be? It's going to be others. So we're going to add others to a new price scale, but we're actually going to change this to a percentage to prove my point of why this is so important. Again, the multiple factor effect is something that's extremely easy to understand. When Bitcoin pumps or dumps just a little bit, you're going to see alts overreact to a multiple degree of anywhere between 1.5 times to sometimes 3 times the volatility. Now, it depends on the market cap of the coin. It really does, because the charts that have more volume that's traded won't usually react as badly as coins that have a lower market cap. For all of you that have been recently liquidated, unfortunately, on Bybit, Binance, whatever exchange, you know that those coins are most likely like way down the market cap list. Whereas, even though we will see volatility for the top 10, top 20, top 50 market cap tokens, you're not going to see as much volatility with those as you will with everything further down the list. Make sense? So whenever Bitcoin is super bullish, we're going to see others, all these low cap gems, pump like crazy. But as soon as Bitcoin has the smallest little pullback, there's going to be a massive correction for these alts, which is exactly what's been happening, ever since March of this year. But instead of going back that far, we actually just have to look at the last couple of days, okay? So we saw over this period an incredible increase. So back here we'll just start from November. So let's go from the election pump right here, November 6th. Let's see if I can get it. Okay, close enough. Actually, let me see if I can. There we go. So from November 6th, we saw, no, I need to get this just right. I need to show the point here. Okay, good. Awesome. There we go. That's what I want. Sorry. Thanks for waiting. So we got this big fat it says 16% on the side. I was not looking up there. It says an 8% pump or almost 9% pump for BTC. Now, what happens is the price of Bitcoin increases over the next month or so by 44%. But if you look over here on this scale, on this Z axis, this is showing the others crypto market cap and how much it increases. Now, the reason why I'm using others and not one specific coin is because some coins just absolutely blew this out of the water. I mean, Stellar Lumens or XLM, XRP, Cardano, all of these OG like utility tokens, it makes no sense, but that's what happened. So we've also seen meme coins incredibly outperform BTC. But the main thing to keep in mind is what happened. Bullish good news for Bitcoin means insanely bullish news for everything else. If Bitcoin is bullish and ranging, we're going to see altcoins outperform Bitcoin by a huge margin. Not all, but most. And we can see that over this period of about a month, we saw Bitcoin increase by 49%. And over here, it says 116%, proving my point that this is actually greater than 2 times the performance. Now, the others crypto market cap is looking at a lot of coins that are basically not in the top 10, and I'd probably like top 20 and below, but still, these are the coins I think of that are way down the list, okay? So if we were just to swap this out, we're going to go ahead and add in, good grief. I don't even know. What should we do? Let's do SHIB. Now, it's not necessarily a terrible, let's see, new price scale. Terrible example to use. There we go, price percentage. So Bitcoin goes up 50%, SHIB goes up 80%. Let me see if I can find another one. Let's find, let's do another one, WIF. So in that same time, WIF actually pumped a lot more and a lot faster, a lot earlier. Then it had a correction, then it fell back down. It went up to 84, so it's still 2x whatever Bitcoin did. Now, the obvious one, you guys are like yelling at me on the screen, is like, well, what about XRP? Well, XRP went absolutely bananas. We can see XRP went up 400%, while Bitcoin only made a measly 50%. But the problem, and I'll leave it on XRP, the problem with this is that anytime there's just the littlest bit of a shakeout, we're going to see a massive correction here for XRP, for SHIB, for WIF, for whatever. So if we look at just the performance over the last 10 days, okay? We saw BTC up here at 108K, and it's fallen quite a bit. It's down 6% from our high set on December the 17th, whereas we see XRP down here at 9%. Now, that doesn't seem so bad, and usually these coins that are in the top 10 shouldn't suffer as much, like I just said. But what does that mean for WIF? Well, let's take a look. WIF is down over that same period, 29%. Well, gosh, let's go in reverse. What about SHIB? I know these are 2 dog coins, but let's just check and see how this works. Is it accurate? Well, look at that, 17%. So what is it about this multiple factor effect that causes all of these altcoins to absolutely suffer whenever Bitcoin has the smallest little drawdown? Now, in reality, over this time frame, we've seen SHIB do really well and moved up 84%, but then there was a massive sell-off. What happens? Well, ladies and gents, the main thing that happens is right in front of your faces. There's usually a lot of leveraged long liquidations that happen, especially in bullish situations. The slightest fluctuation in Bitcoin's price will cause all of these low cap alts to literally freak out. It just takes one little sneeze on Bitcoin to flush all these leveraged longs, and that's exactly what we've been seeing all month, right? I mean, there's no different. The other reason is that even if you're not using leverage, there are stop losses being triggered. When we see the price go up for SHIB and it's going up higher and higher and higher, and it goes up like this, and then it has a pullback of 20%, which is significant. That is a substantial pullback. If we go over here to our log scale, it goes up here to 27 and then down here to 23. That's going to be a painful drop over here for SHIB. And most likely, we're going to see people getting in too late. The price goes against them. They get afraid, then the price takes a while to recover, shoots up even higher, making everyone else pissed off. They all get in late, and then the price goes against them yet again. So the multiple factor effect can be an extremely aggravating reality of crypto trading. So how do we know when this is going to happen? Well, the reality is that we can use a couple of things to help us figure out when this is going to happen. And it's as simple as keeping track of stablecoin dominance and any sort of fluctuation in stablecoin dominance or signals telling us that there could be a bottom forming on stablecoin dominance. Therefore, dominance moving up for stablecoins means increased fear. Or the inverse, Bitcoin dominance. When Bitcoin dominance is pumping, that's usually a sign that altcoins will be weakening. So whenever we see Bitcoin dominance shooting up higher and higher and higher, we can be almost certain that it's not going to end well for altcoins. Now, others dominance is extremely helpful to keep an eye on as well, especially when it hits long-term overhead resistance levels that have been in play since, it says, January 2022. It's established here in March 2024, but that was a major rejection from that level. So what do we do? How do we navigate these periods where there's going to be just a lot of volatility for others, for alts? Well, like I said at the beginning, it really does help to keep your portfolio buoyed by Bitcoin. You might be a new trader to crypto. You might be looking at all these meme coins, all of these AI coins, all of these utility coins, Litecoin even being a meme coin, utility coin, OG coin, everything coin. You might be looking at these as your ticket to get rich, where in reality, Bitcoin is the long-term winner, and it has been. That's not going to change. So as boring as Grandpa BTC may seem, it's actually a smart idea to keep a percentage of your portfolio in BTC. But the moment where we see Bitcoin dominance starts to plummet, not recover, but start to fall and fall, that's going to be a huge signal that others' dominance should be increasing, which means that all of these low cap coins you can see over here in this list, basically everything from, I would say, Aptos and below, these coins should be going absolutely bananas crazy. And that's what will happen when we see Bitcoin dominance fall. We're going to see a ton of these pump and go absolutely insane. Now, the reality is that you don't have to just stomach all of this volatility. While buying and holding is one of the easiest ways to make it in crypto, a lot of the time you don't have the patience and you don't have the right time frame and you don't have the guts to actually hold on to a position that's red for a long time. And everyone that's holding XRP or has been holding XRP for years, you know exactly what I'm talking about. So how can you circumvent, how can you get around one of these disastrous sell-offs? Well, the answer is a lot simpler than you think. It's automating it. This is like it says, a MASA generator. It's really small. Sorry, you have to get real close to the screen. But this is a bot that is generating MASA or MASA for me. Now, why MASA? You know what? I don't know, but it was a great looking chart. It's a new listing. It seems like a good ticker. I'll show you the chart in just a second. But the main reason why I like this chart so much is because it's an AI coin. It's a new listing. It has a lot of upside potential in bullish conditions, which I still believe we are fully in. And the beautiful part about a generator, a bot like this on Altrady, is that by running it with specific configurations, with specific DCA levels and a DCA approach, I'm able to weather the storm of all of this multiple factor effect nonsense that happens with alts falling down 50% against Bitcoin, because this bot is programmed to absorb negative price action, so that on every single bounce, it sells on the bounce and it keeps the profit in MASA every single time. Now, you could do this with any other coin that you want. We even have free signals called the TBT signals that are available on Altrady. but I want to show you a couple of these stats. This bot has been an absolute beast for the last 22 days. It's made 27%. Now, that may not seem like a lot to a lot of you leveraged degens out there that are trying to make, 100% on every single trade. But if you think about the fact that I've literally done nothing other than just check in on this bot less than 15 minutes a day, that's pretty insane. And with the little amount that I have allocated to this, I've passively accumulated MASA over and over and over for the last 22 days. There was a period, and I'll show you in the chart, where MASA went up a whole lot. Then there was a period where MASA dumped a whole lot. Guess what? My bot was buying when the price is going up. My bot was buying when the price is going down. And every single time it sells, it's accumulating MASA. Why? Stay tuned. I'm going to explain why this is such an insanely powerful and profitable bot for the future. So just pay attention, okay? But I want to show you way down here at the very bottom. Yes, there are lots of lovely little stats, lots of fun little graphs showing me that I'm making some decent money. It's small chunk change, like $8 a day, $13 a day. Some days there's nothing. That's super duper normal with bot trading, just so you know. But this is where this shines, right here. When we understand how DCA bot trading works, we can weather the storm of this multiple factor effect in crypto, because we know that when we use DCA, we actually make a whole lot more profit. Out of my total P&L earned with this bot, 36% of my P&L has been earned with just 7 trades, because these 7 trades used that final DCA order. So we actually want the price to go against us. We want to see the price dip and dump and recover quickly, because that negative price action is how DCA bots make a ton of cash passively in an automated way. So this bot has been generating a lot of really nice profits. And I want to show you the chart actually to give you an idea of how this bot has been running. So and this is perfect too, because I actually have a position that's in a loss right now. Now, I would love for all of you watching this right now to go, you're showing us a losing trade. Guess what? All of these trades that showed these red arrows right there, those are all sells. And guess what? A lot of these sells were once in a loss as well. But an unrealized loss is not a loss. Let me say that again. An unrealized loss isn't a loss. Right now, you can see here's my break even, here's my take profit target, and I still have another order open. The best part about this bot is that while I was celebrating Christmas with my family, while I was hanging out with my family, while I'm filming videos even like this, I have other bots that are running passively in the background to accumulate. So while the price of MASA, while I've been running this bot, I have to zoom down here, since December 4th-ish, I want you to see how powerful this is, because this is so cool. Here's the price range. So it started here. So the price of MASA has moved up 32%, actually a maximum of 38%. But in the same period, it's also fallen 20%. Down here, it fell as far as 27%. And guess what? Right now, I don't know if you can see that. It says right now, based off of my first trade, it's up 1.8%. I'm laughing because a lot of us as traders buy into a coin that we're waiting on to shoot up 100x, 500x, 1000x, right? This is hilarious to me, because this is the reality of holding in crypto. Sometimes the conditions will be so positive and bullish and in our favor that we see the price shoot up 30, 40, 50%. But if we don't take profit on the way up, then guess what? You're going to give away all your profits. And I'm also laughing because the price dipped 26%. Now, on this dip that happened, a lot of you probably got liquidated. Well, not a lot of you, but we'll just say a lot of leveraged longs got liquidated on MASA. You can see it right here. This is the hourly chart. And in 1 hour, it dropped 9.88% right here. That's a huge 1 hour drop. And from this right here down here, that's a 20% drop in 3 hours. Yeah, you better bet your bottom dollar you get liquidated right there. It's a lot of volatility happening when Bitcoin's having a little bit of a cough. But then we see all these buys come back in. There's a big victory bounce to come back down, go back up, and go back down. So the reality and the funny part about this is that if we would have bought MASA here, we see the run up of 32%, and then it comes right back down. We're kicking ourselves thinking, oh, I should have sold at 32%. And then the price goes against us. Oh, I'm just going to sell here, only to miss out on another rally where it exceeds that. It goes up 38%, and then it gives it all away and then goes even farther. I'm laughing because this is the perfect example of why automated trading is such an incredible and winning strategy. Because over this entire time, where the price of MASA has pumped 38% and dumped as much as 27%, my bot has been consistently generating MASA. Why? Because the future is bright for new listings. MASA has yet to even retrace to its listing high of 94 cents. And I fully expect a chart like MASA to not just hit that target, but to go a lot higher. So when the price actually goes up to its listing high here on Bybit, that's a 540% increase. That means that all the MASA that my bot's going to be generating passively without me having to pay attention to anything is going to be worth 5 times more by the time the price pumps. And if things get really overheated, which I expect them to, then we could see MASA maybe go a 15x. Maybe if things go crazy, it'll pull a 50x. I don't know what's in store, but the reality is that I'm taking advantage of this time, of all of this chop, all this consolidation to accumulate MASA passively for a big payoff in the future. So instead of me just buying $500 worth of MASA, seeing that position go up 30%, seeing it go down 27%, I'm doing this over and over and over again, passively accumulating more MASA. And it doesn't have to be just this one coin. I am not endorsing MASA. I haven't received anything from the MASA people. I'm probably even saying it wrong how they would say it. So it doesn't really matter what the coin is, but the strategy remains the same. I use automated trading tools so that when Bitcoin has a little bit of a dump and everything else goes crazy, my bots are there to buy the dip every single time. The multiple factor effect is 100% real, and you can check this out using the overlay strategy that I showed you over here on TradingView. So all you have to do is go BTC, hit the plus sign, type in anything you want to see how it's performed over that same time. And when you do this, you want to hit new price scale. You change the Z-axis to %, 2%, and you can see how has AVAX done versus BTC. So this way I can see, oh, okay, well, yeah, Aaron's right. Because when Bitcoin has the smallest little dump, we see AVAX go from 96% all the way down here to 35%, where Bitcoin is still winning. So I want you to consider this multiple factor effect. It will honestly help to protect your portfolio, which should be your number one goal in crypto. You don't become rich if you don't got a portfolio. And I also want to remind you, I have tons of other great videos here on my watch list on the Coin Bureau Trading channel. If you go to playlists, go to Aaron, I have a ton of other videos that you've got to watch to learn how to make some good cash, some good profits, some good sats in this bull market that I still fully believe that we are in. So let me know what you think of automated trading. If you've tried bot trading before, let me know what you think about accumulating or even MASA. Drop a comment down below. I'm going to do my best to get back to you. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.